Bank of Nova Scotia was the best performing Canadian bank stock this year. Its shares surged more than 35% after lagging its peers in 2015. International banking, which was a source of worry for many investors, delivered solid returns. I asked CEO Brian Porter if the momentum will continue.
We're really focused on the Pacific Alliance, the countries of Mexico, Peru, Chile, and Colombia. These countries are going to grow around 3.5% in terms of GDP growth in 2017. We're a universal bank there, personal and commercial bank, corporate bank, wealth management, and business is very good for us.
Some analysts have seen the EM markets for you as a little risky, as a place to watch. How do you reassure them that that's actually not the case for you?
Well, the bank's been around for a long time. The bank's going to celebrate its 185th anniversary next year, and we believe in diversification and optionality. And, for instance, Mexico, which is a very important market for us, but it's 5% of the overall bank. And Peru is a very important market for us, as is Colombia and Chile, and these markets are growing well. Middle class is growing. So if you look at Mexico, for instance, it has 122 million people, so the population is about 4 times as large as Canada, growing middle class, lots of internal consumption, so it's an important market.
Should we look for more acquisitions from you?
Yeah, we're growing organically, and we've done some acquisitions that have been tuck in from time to time that are on strategy. So we're very thoughtful about how we deploy the shareholders' capital, but Mexico, Peru, Chile, and Colombia are going to be part of the growth strategy for the bank for some time.
You mentioned the Canadian business. What's driving the performance there? Because you did outperform some of your peers here at home. What did it?
Well, it's been, again, focus on our customer, running our business better. We've acquired we acquired a portfolio in the credit card business. That's been good for us, and we managed to a risk-adjusted margin in that business. So it's really, we've grown some businesses that we would say that we were under-indexed in, but we've just been more thoughtful about, again, how we allocate shareholders' capital and how we've grown the business.
And when you look at allocating shareholder capital, what are the priorities? What's the best way to deliver?
Well,
returns?
we want to make sure that any financial transaction is on strategy, that's accretive for shareholders, that any acquisition is, there's always social issues in acquisitions, there's technology issues. Sometimes those get brushed aside and people just look at the financial metrics. But we want to make sure that there's an ease of integration, that the people and the business that we're acquiring fit. And those are some of the social issues, but those are very important.
And in terms of investments on that front, you've done so in Mexico. Once you've kind of invested in technology and a platform in a country, does that suggest the tuck-in acquisitions become easier there?
Yeah, they do. We're in the middle of, we're spending about $200 million US putting a new core banking platform in Mexico. When we finish that in Mexico, we'll do the same thing in Colombia. But it's easier to acquire a business and tuck it into that new technology.
Some of that international business has been seen to be quite separate for you, a great source of business and growth. How much, as you look down the road, is about Canadian businesses wanting access to those markets, in other words, driven by your customers here?
We're there because our customers are there. So whether in Mexico, and I know you've been there and seen some of the Canadian auto companies there, we're there because we bank them, and Mexico's been a great market for us, as is, we've got mining companies throughout our footprint, oil and gas companies. So Canadian companies are looking beyond the U.S. to expand their businesses, and Scotiabank will be there for them.
What about other Southeast Asian countries that you've looked at, including some that you may be pulling back from?
Well, we've adjusted our operations in Asia a bit. And that's a function of, we've got lots to do here in Canada, we've got lots to do in our Pacific Alliance countries. You don't want to spread yourself too thinly. Asia's important for us, but it has to have some tie to our America's business. So there's got to be some connectivity from a customer perspective back to North America or back to Latin America.
So strategically, where does something like the TPP fit? If it happens or if it doesn't happen, how does that change your plans?
Well, trade is important, and we're a big believer in the power of trade agreements throughout our platform. And if you look at Mexico, for instance, Mexico, away from NAFTA, has trade agreements with 40 other countries. Mexico is an export nation. And so that trade's really important. It's important for Canada. And we believe in trade agreements because it leads to prosperity for the countries involved.
One of the places that Canadian banks have really focused and has been a source of strength is wealth management. Right. You've had some asset sales there. Yeah. Just what's the strategy for you on wealth?
Well, we're spending a lot of time in our wealth business. First of all, we really like the business, and it's a growing business for us here in Canada and throughout our platform. 2 years ago, we sold our position in CI Financial, and we've announced our sale of Hollis Wealth, and that's just, we're executing our strategy, and it's around our customer, and we're going to continue to build our institutional wealth business. And you're going to see us continue to grow our business internationally as well, which we think has significant potential.
On the Canadian front, as you pointed out, solid here. What's the risk there? Is it the Canadian economy not being as strong as it might be?
Yeah, I think for 2017, we see the Canadian economy growing at about 2%. You remember if we were sitting here last year, the narrative around Canada was quite negative, falling energy prices, falling commodity prices, a weaker Canadian dollar for sure, but things feel better and Canada's adjusted. The economy always adjusts and the banking system adjusted, and we feel a lot better about Canadian growth here, and I think that the Canadian government, the federal government in terms of infrastructure spend is going to be positive. That's going to be more beyond 2017. But with commodity prices improving, that's going to help Western Canada. So we're more positive about the economic outlook for Canada.
We did see actually the fears of bank exposure to commodity companies overblown, or at least well managed. I guess we can give you credit for that. Can we say the same about housing? Are your peers managing the exposure to some of those markets as well as they might?
Well, I'm not going to comment about what our peers are doing. I can comment about what we're doing. We think we've got the most conservative mortgage book in Canada. 60% of it is insured, and our loan to value on the uninsured portion is about 50%. And we've been very thoughtful in terms of managing our risk in our Canadian banking business, and we'll continue to do that in 2017.
By the standard measures, the Canadian banks are doing well. All of the metrics that you've used for decades. But there's real disruption headed your way, and I know you're all thinking about it. Yeah. What are you watching, and what do you need to do as leader to make sure that you aren't disrupted?
Well, it's, we partner with a bunch of fintechs throughout the financial space. I'm going to Israel in January to see some firms that are at the forefront in terms of cybersecurity, in terms of managing our risk, managing the perimeter of the bank, and I'm looking forward to that. But, we continue to invest heavily but thoughtfully in technology. We've just opened our digital factory here in Toronto on King Street East. There'll be 450 professionals there, data programmers, data scientists, really working around the customers, making it more frictionless for customers to do business with us. So we're being very thoughtful about our investments in the technology space, and fintech partnerships are a big part of that.
That was Scotiabank CEO Brian Porter. Still ahead, what price will CIBC have to pay to grow in the world's largest economy? We'll ask CEO Victor Dodig about his U.S. expansion plans next.